Thank you. Good afternoon, everybody. Again, my name is Anise Norman, and I'm a public affairs specialist with the Social Security Administration. And I'm going to take a little bit of time today just to go over the basics of what you need to know when getting ready to retire. So, when you're thinking about retiring, there are a lot of different schools of thought out there because some people say, well, when you turn age 62, you got to come in, you got to start your retirement benefits with Social Security, even though you're going to get a smaller check for a longer period of time, versus that school of thought that says, if you wait until your full retirement age and then you'll get a larger check for that period of time. Well, I'm going to tell you that when it's time for you to retire, it is a very personal decision for you because you need to look at what your financial situation is in terms of, do you have enough money saved? And also, your health plays a role into that as to when is the right time for you. So just because somebody else is saying you got to do it at a certain age, you don't know what their situation is, so you have to do what's best for you and your family. And some of the things I'm going to go over today is, are you going to work after you retire? What are the Medicare considerations for you, as well as what tools we have available on our website that can help you to make that informed decision. One of the tools that we have, and it is a fantastic tool, is the My Social Security account. And what My Social Security allows you to do, it allows you to take control and look at your information with Social Security. Because how many people out there remember those statements that you used to get once a year around your birthday? Well, for a little while, our agency stopped those. And the reason we had to stop sending those out was because of budgetary cuts. And they recently started that back up again. They started it last year. Starting at age 25, you'll get one statement sent out once every 5 years up until you reach age 60. At age 60, you get one every year because you're getting closer to that retirement age or to the first possible point that you can retire with Social Security so that you can see that information. But what is great about creating this online My Social Security account for yourself is that you can see this information at any time. So if you just wake up in the middle of the night at 2 in the morning and say, I got to know what my information is, you can go online, look at your information, and then you can also print it out, to have and to put with those other statements that you've saved over the years. A couple of things about the My Social Security account. Well, if you don't get benefits, what can you do? As I said earlier, you can go in and you can look at your information. One of the things that you're going to see is your earnings history over your lifetime with us. And that's a very good thing for you to review prior to you deciding to, come into Social Security to file for that retirement benefit. That's because you want to look to make sure your earnings are correct throughout your history. So if it is not correct, say for an example, if you're looking at a particular year and you know you made more money than that, then what you would need to do is to bring in a W-2 to your local servicing office. And with that W-2, it doesn't matter of the year. As long as you have it, we'll go back and correct that year for you. But say for an example, if you say won the lottery and you got a 1099, well, with a 1099, you have 3 years to correct that information. So it's really important to keep track of your earnings and know if they got reported correctly for you by your employer. And that way you bring that information into us so that we can update it and then get that potential benefit recalculated for you. Now, if you do get benefits, then you can get your benefit verification letter from us. And in the past, when people needed those benefit verification letters, they would have to go into their local servicing office, take a number, and then wait in line until somebody called your number, and then you may sit there waiting for a little while until your number is called to come up and speak with a representative who may be with you for 10 minutes or less just to give you a sheet of paper that's going to show you what your benefit amount is. And you might need that. So say for an example, if you are refinancing your home and the bank has asked for that information from you. Well, the good thing about the My Social Security account is it lets you print that out from the comforts of your own home and you don't have to go into your local office. Another good thing is that you can also change your address and telephone number, and you can start or change your direct deposit information if you had to switch banks for some particular reason. And all of those things can be done from the comforts of your own home. Now, your online Social Security statement provides estimates of the retirement and disability benefits that you're going to receive. And what you'll see on there is your estimated benefit at the earliest point, which is age 62. What your estimated benefit would be at your full retirement age, and that's going to depend on your year of birth, as well as what your estimated benefit would be up to age 70. And at age 70 is when the Social Security Administration stops the calculation, as well as if you have been working for a long period of time. As long as you've worked 5 out of the last 10 years, you're going to see what that estimated disability information would be, and more importantly, what potential benefits your family members could get. So how do you qualify for retirement benefits? Well, the short answer is you got to work. And you have to work to earn, these credits. And so for this year, 2015, and as well as 2016, each $1,220 in earnings is going to give you 1 credit. You can earn a maximum of 4 credits per year. So that means that to earn 4 credits for this year, you need to gross $4,880, and you need 40 credits to qualify for a retirement benefit with Social Security. And basically, we're talking about 10 years worth of work, and that's going to get you that minimum qualification to be able to get that benefit once you reach retirement age with us. And I'm going to ask that you take a moment here to find your year of birth, and then come across on the chart to find your full retirement age. And what your full retirement age means with Social Security, that means that if you wait until this particular age, that when you come in to file for your benefits with us, that you would get 100% of that benefit. If you take it early at age 62 or somewhere between 62 and your full retirement age, then keep in mind that that amount will be reduced. And when I say reduced, I mean it's going to be forever reduced. It'll never go up to the full amount. It'll be reduced from that point, and then the only increases that you would get would be those cost of living increases that are determined around this time of year. And unfortunately for 2016, we've already found out that there will be no COLA increase for beneficiaries for 2016. And I have an example here that if you were born between 1943 through 1954, if you took your benefits at age 62, then you're only going to get about 75% of the benefit, versus waiting until your full retirement age, such as this individual, which is age 66 in this example, she would get 100% of her benefit. And if she decided to wait up until age 70 to apply for her benefit with us, she would get 132% of that benefit. And if she were to retire somewhere between age 66 and 70, then she's going to earn what we call delayed retirement credits. And what that does is it adds to your benefit amount, and it incrementally increases it kind of like every month up until you reach that max of either 132% up to age 70 there. Another good tool that we have in our agency is the Retirement Estimator. And one of the really great things I like about this tool, when you go out to our website to use this, we're going to ask you your permission. Do you want to use it? Get your consent. But most importantly, you're going to put in your name, your Social Security number, and your date of birth. And what this particular calculator does is it's going to pull in your earnings history over your lifetime to give you a pretty good estimate, or, of what that benefit would be for you. And it lets you create those different what-if scenarios or situations, because somebody says, well, I'm still working at 62, but I'm not going to wait to my full retirement age. I think I'm going to stop working and retire at 65. So what would I get at 65? And it is a very close estimate of what you would get. Just know that your real benefit amount that you would get, you're going to find that out when you actually apply for benefits, because as I said, each month that amount is incrementally increasing. So until you come into Social Security to apply for your benefit, you're not going to know the exact benefit amount, but this is going to get you pretty close and very close to where you need to be. So in addition to the retiree, who else can get benefits? Well, your child, as long as they are your biological or adopted child and they are age 18 or 19 if they are in high school, or if they are not married and found to be disabled before age 22 by Social Security's rules. In addition to your child, your spouse, if they are age 62 or older with little or no work history, or at any age if they are caring for a child that is under the age of 16, or if that spouse is found to be disabled. With the spouse's benefit computation, they can get up to 50% of the worker's benefit. And so that means that the spouse will receive 50% or half of what that worker is receiving if they wait until their full retirement age to apply for it. But say, for example, they decide they can't wait and they apply for it at age 62, then they're going to get roughly around 35% of what that benefit would be. One of the key things to remember here in this scenario is that worker must be receiving benefits, meaning that they have come into Social Security, they have applied to start receiving their Social Security benefits. Because they've applied and started to receive their benefits, then that spouse can come in and apply to receive benefits off of that record. It doesn't reduce the worker's amount at all, because the amount that the spouse is going to get comes out of the family maximum portion, because on that statement how you'd see the amount available for like the spouse and the dependents, it comes out of that pot. Now keep in mind that if that spouse has worked, then we're going to look at their record to see what they could potentially get on their own record. And if what they could get is less than half of 50%, then we're going to combine those two to get them up to 50%. And I do believe I have an example that's coming up. I think it's in a slide or two. In addition, we have the divorced spouses criteria. What I tell everybody about this criteria, this is a very strict criteria, meaning that you have to meet these bullets, meaning that you had to have been married to someone and the marriage lasted at least 10 years within duration. You have to be age 62 or older and not married. You had to have been divorced from that person at least 2 years. In this situation or scenario, the other person does not have to receive benefits. And again, the ex-spouse's benefit does not have any amount on what you or your current spouse would get. And again, we're going to take a look to see what they could get on their own record. And if it is less than 50% of the worker's amount, then we're going to combine it together. Here I have a couple of examples here that we're going to take a moment to go through. The first example I have is Ricky. He's receiving $1,200 a month. Half of his $1,200 is $600. Well, his wife Lucy comes in and she files for benefits. But when she files, we look to see that she can get $1,000 off of her own record. Well, $1,000 is more than half of the $600. So because her amount is more than half of his amount, Lucy is not going to be able to draw anything off of Ricky's record. So we good on the first example here? Okay. Our second example, we have Edith, and she receives $1,800 a month. Well, half of her $1,800 is $900. Well, her husband Archie comes in and he files for his benefits. Off of his own record, he is entitled to $600. Well, because of that, he is potentially eligible for an additional $300 off of Edith's record. But keep in mind, in order for Archie to get that extra $300 a month to bump him up to that $900, Edith has to have applied for benefits with us and receiving those benefits in order for Archie to come in and get that additional $300. Are everybody with me on that? We're good? Okay. Next up is we talk about survivor's benefits and who can get those. Again, you have that child as long as they are not married, age 18 or 19 if they're in high school, or not married and disabled before age 22. Then we have the widow or the widower. With the widow or widower, they can get reduced benefits at age 60 if they choose to do so, and this is going to be a reduced benefit. Or If they decide to wait until their full retirement age, they can get 100% of that deceased worker's benefit. Or at any age, if they're caring for a child under the age of 16 or found to be disabled. And again, you have that divorced widows or widowers. They may potentially qualify for this benefit as well, but keep in mind, we're going to look at that divorced spouse's criteria to make sure that every single element is met. With the widow or widower's benefit computation, if that person decides to take it at age 60, approximately they're going to get 71.5% of the deceased worker's unreduced benefit. Or if they decide to wait until their full retirement age, they would get 100% of the deceased worker's benefit. Now keep in mind that if that person does take that benefit at age 60, here's what we're going to do for them. If they take it at age 60, then when they reach age 62, Social Security will go and look at all other potential records that they could draw benefits off of, and we're going to look to see if there is another record out there that we can pay that person a higher benefit amount on, and if so, then we're going to switch them to the higher record. And then just keep in mind that, we can pay full benefits to both the widow or the widower and that divorced widow or widower. Now, a lot of people always ask me this question here. Well, what happens if, I get my check and it's not enough? Can I go back to work? The short answer is yes, but you need to know what you're up against. So if you are under full retirement age, meaning that if you start to take that benefit between age 62 and before the point where you're eligible for 100% of your benefit, then you can work, but you can earn $15,720 a year, or that equates out to $1,310 a month. If you go over that amount, Social Security will reduce your benefits $1 for every 2 that you go over that amount. The next column here is in the year that full retirement age is reached. My example that I like to give is, say, for example, we have an individual, their full retirement age is, we're going to say it's November. But for whatever reason, that person couldn't wait until November to come into Social Security to apply for benefits. So instead, they came in April, started filing and started receiving their benefits. Well, from April all the way through October 31st, that person can work and earn $41,880 a year, or $3,490 a month. As long as they do not go over that amount, then they're good. But if they do, then their check is going to be reduced $1 for every 3 that they go over that amount. So what happens when that person in that example, well, when they hit that November, the month of their full retirement age, well, once November comes around, at that point, Social Security doesn't care about how much that you make. You can earn $1 million. We don't care because we're not going to reduce your benefit, but just keep in mind that you may have IRS tax implications that you have to deal with. Any questions over the earnings limits? A lot of people ask me, well, how do I apply for Social Security benefits? The rule of thumb is that approximately 3 months prior to you getting ready to retire for Social Security, you can contact us. You can even contact us up to 1 month or 2 months. It just depends on, as you're looking at all of your information and deciding what is the best point for you to retire. You can apply online with us at socialsecurity.gov. If you do decide to do your application online with us, approximately it takes about 30 to 45 minutes to complete the application. But one of the really good things about doing it online is that you can do it at your leisure, and you can start and stop that application as you need to. Another way to apply with us is call our national 800 number, where you can either set up yourself either a telephone appointment, and we're going to call you on whatever a specific day or time, and we just ask that you make yourself available at least 15 minutes prior to your appointment time, so so that we can contact you on the phone, and we're going to ask you the very same questions as you would go through if you decided to do your application online with us. And the same thing if you decided to contact us for that face-to-face interview. Same thing, we're going to go through the same questions with you. So it doesn't matter which way that you decide to apply for benefits with us. Once you complete your application with us, we're going to let you know what type of documentations, or as we like to say, proofs that we would need from you, such as, do we need to see your birth certificate? Are we going to need to see that marriage or divorce decree? And I tell a lot of people that during the process, it's going to seem like we're being a little nosy, so to speak, in terms of prior marriages and all of that information, but we're trying to cover that information with you so that if there's a point that you could be potentially eligible off of another record, we have that information so that we can go back and take a look at that to protect you and your benefit. Here is just an example of our website page, and what you do is come to this particular page on our website. You're going to select benefits, and when you select benefits, then the next screen that you're going to see is our retirement screen. Here you're going to select the blue box that says apply for retirement benefits, and again, like I said, you can start and stop it at your leisure and just take your time and go through the application for yourself. Here in the corner here, we've highlighted an area of our website where if you decide you want to read up on different topics, we have numerous publications, as well as using that retirement estimator or that planner out there for you to go on our website and take a look at. When you are getting ready to retire, one of the things that I tell everybody is that prior to you getting ready to retire, it's really important to know that when you do start receiving your benefits with Social Security, what day of the month is it going to come on? The most important part here is the pay date based upon that worker's birth, and that's going to be either the first through the 10th is the second Wednesday. The 11th through the 20th is the third Wednesday, and the 21st through the 31st is the fourth Wednesday of the month. It's really important that you pay close attention to your payment cycle, because this is something that is set in stone. By law, Social Security is unable to change whatever your payment cycle date is. So it's very important for you for planning purposes to make sure that you have enough money to cover yourself until that check starts. And one of the things I don't think I mentioned earlier is that Social Security was never designed to replace your retirement income. With Social Security, you're only going to get approximately about 40% of what your pre-retirement income is. So it's really important that you are planning appropriately to make sure that you have that 401k, you have money and savings to kind of hold yourself over, to make sure that with that 401k and that other money, that when you add it all together, that you're going to be able to live comfortably, because Social Security was always designed to be a supplement and not somebody's main source on how to live when you retire. Our agency does embrace social media, so if you decided to go to some of the different social media sites, you can find information on those sites about Social Security, such as Facebook, Twitter, YouTube, and Pinterest, as well as going to our website to find any additional information that you may need about Social Security. You can always visit our website at www.socialsecurity.gov, or you can call our national 800 number at 800-772-1213. And before I get into the Medicare, typically this is where I kind of stop to see if you have any questions about what I've covered thus far. Yes, ma'am. And you don't mind, I'm going to come down there so they can hear your question.
Oh, I can talk. Well, we'll see. So my husband is fully retired at 78, and he receives his Social Security check every month. When I retire, I'll receive mine based on my own record. Should I die, does he receive my benefit, or does it then come down to whose is higher? In other words, if mine is higher, he would then begin receiving mine, or he would keep his no matter what?
Okay, her question is her husband is receiving his benefits now, because I just want to make sure I got this correct for you. Once you start to receive your benefits, and if you should pass away, which record would his benefits come off of? Well, what Social Security is going to do is we look at both records to see which record would be most advantageous for that individual to get the higher benefit off of. But again, we're going to look to see how much his benefit is, and if it's less than half of your benefit, and then if we need to adjust it accordingly, we definitely do that.
Okay, thanks.
Anybody else with a question? I'll come around to you.
Does retirement income count against the Social Security benefit?
Okay, the question is, does retirement income count against Social Security? Are you talking about in terms of the working amount that I was mentioning earlier? No. As long as it is income from where you are working for an employer, that's what we look at, where you are paying into Social Security, paying that Social Security tax. If you are getting a pension type of income, Social Security does not count that into the $15,720 or that other amount for you. Anybody else have a question? Yes, sir.
Can you explain the windfall elimination provision?
Okay, the windfall elimination provision, what is that? Well, that is where an individual at some point has worked for an employer where that employer did not pay into Social Security, and it was probably because they had some other type of retirement or pension plan that they offered for that person. And what the windfall elimination provision does is we will not allow a person, so to speak, to kind of get kind of like a bonus, so to speak, where because it'll look on our records as if you were a low earner. And with people that were low earners, those low earners, their benefit would be a lot higher than somebody that is not. But because you have worked for an employer where you did not pay into Social Security taxes, your Social Security benefit would be reduced. For this year, 2015, the estimate of what that potential benefit could be reduced by is, I believe, is $278 up to the maximum amount of $414. But the best way to see how the windfall provision applies for you, I'm going to tell you this, is you need to create yourself that My Social Security account. Once you create it, print off your earnings record over your lifetime. Then you're going to go in and then you're going to go to our windfall elimination provision calculator. That calculator there, you're going to input, I'm trying to go through this on the top of my head, exactly how much would that non-covered pension that you're going to get, what's the estimated of that. Then you're going to put in all of your years of your earnings. Then down at the bottom, once you hit calculate, it's going to tell you whether you're insured or not for Social Security. And if so, it's going to reduce what your estimated Social Security benefit would be for you so that you'll get a better estimate of what it would be. And like I said, the average reduction is for this year between $278 up until the maximum of $414. So even if you're looking at your My Social Security account record and you're looking at what your estimated benefit is, if you have worked for an employer that did not pay into Social Security, then I can tell you right now that amount is not correct, because you need to take the windfall into account, and that calculator is the best tool that we have for you. And it seems like it's a lot, but it really takes about 5-6 minutes, because I went to another employer probably the other week where that whole employer, nobody pays into Social Security, and I spent time with a lot of their employees in their computer lab going through that, helping them create that account, and then going through the windfall calculator. And a lot of them were very pleasantly surprised, because they were under the misconception that I'm not going to get anything from Social Security, and a lot of them got more than what they thought they would get. And one of the reasons is because a lot of times with those employers that don't pay into Social Security, you're going to find that your benefit from them is a lot more than what your Social Security check would be, because the most that somebody can get from Social Security, the largest check is approximately in the neighborhood of $2,600 a month. And most of those employees, when they would tell me what their estimated pension check was going to be from their employer, was almost double that amount. Did that help you? Yes, sir. Yes, sir.
Assume a person has reached full retirement age and they are collecting Social Security. Then they decide to go back to work and collect more credits on Social Security, pay into the Social Security the taxes. Does anything happen to those taxes that you pay into? Is your benefit adjusted at any point?
Okay, his question is if somebody is full retirement age and they are receiving their 100% of their benefit, but they decide to go back to work for an employer that is paying into Social Security, correct? Okay. So what happens to those earnings? Well, Social Security, they accumulate, and then at a certain point every year, they're going to go back and they're going to readjust or look at your benefit amount. And going to get a notice from Social Security letting you know how much your benefit will be going up because of that adjustment in your earnings. Yes, sir.
Having already logged in and looked at the estimators, what presumptions go into that? I'm several years away from retirement, and I don't know if it presumes, a 4% increase or no increase in terms of earnings over those remaining years. And the second part of that is my wife, for a period of a couple of years, was getting like a $20,000 bonus for not going someplace else. So it made her earnings look higher than they were after that point. And so we're not sure how we need to, adjust that. Are the formulas out there someplace where we can figure out our details?
Okay. That's a lot of questions. Let me just tell you, there are some formulas out there. And before I go, if you will see me, I'll make sure that I know that we do have a handout on our website so I can tell you exactly how the benefits are calculated. But with the calculators that you're doing that what if game, when you're entering that information on that calculator, it is assuming that your earnings are at the same level because it's going to ask you what you're making right now, and it makes the presumption that your earnings will remain the same. No, sir. No, sir, it's not. Any questions? No. Any other questions? And then on the other part with your wife, just see me and I'll give you some more information on that. Any other questions? Anybody else? See if I can reach you. I'll come around. I'm short.
I've just talked to different ones that say, why not start accepting the benefits at as soon as you can at 62, because by the time you count all of that income that you haven't received, and then by age 66, that 25%, it just doesn't equate. Do you know what I'm saying? Okay.
And again, that is really going to, now her questions is, why should somebody take their benefit at age 62 versus waiting till their full retirement age? Because if you do the math, you could potentially get more money over the lifetime of your benefit. And that's what I was saying about, with a lot of retirement planners, there are two schools of thought. Because I was with a gentleman where he was telling me that him and his brother-in-law were having this big debate about one took their benefit at age 62 and was getting 75% of their benefit, but has been getting it over a longer period of time, versus the other one who waited until their full retirement age, getting the larger check, but just still not from the point that they're getting it, don't know when it will end because of the life expectancy. And it really comes down to a personal choice in terms of what's best for you and your family and your financial situation as when you want to take it. Because there are some people that are just proponents of you got to take it at age 62. And then there's the other ones that say you need to wait. But it's really a matter of personal choice. Okay. Any other questions? If no other questions, then I will kind of go into the Medicare segment of the presentation for you. And with Medicare, what I'm going to tell you about is just the basic information that you need to know here. A lot of people ask, when can I get Medicare? And a lot of people get kind of confused about, okay, well, at 65, I got to do Medicare or take my Medicare and apply for Social Security. But keep in mind that you're not required to take your Social Security benefit at age 65 because you need to look at when your full retirement age is for that particular individual, as well as, looking at what is best for you and your family. What I will tell you about Medicare is that 3 months prior to age 65, you need to file an application with us to apply for Medicare. You can get it at age 65 or older, or if a person has been receiving disability benefits with Social Security for 24 months or longer, then they would qualify for it. Individuals with ALS, or individuals with permanent kidney failure and receive maintenance dialysis or a kidney transplant, kidney transplant. And then finally, if that individual has been exposed to environmental health hazards. The basics about Medicare. Part A, at age 65, everybody needs to apply for Part A, and that is your hospitalization. With that part, there is no premium. That part is the free portion. And even if you are still working and covered under a group health care plan, you should still apply for Part A because that part is at no cost to you. Part B, that is, your outpatient coverage. That's where you're going to pay those premiums, that monthly premium, and then you're going to go to your doctor and potentially have that copay. For the year 2014, individuals were paying $104.90. We do know that the Medicare premium is going to go up for new individuals coming on the rolls for 2016. As to the exact dollar amount, it's not out, it's not posted yet. So in terms of telling you exactly what the new premium would be, unfortunately, I'm not able to give out that information because we don't know yet. But I think in reading, it was going to be roughly about a 50 to 52% increase over the 104.90. So just kind of keep that in mind until they actually post that real number for you. With Part B, if you are still working and covered under a group health care plan, if your employer tells you that you do not have to take Medicare Part B, keep in mind that you can opt out of Part B, and that means that you're just refusing to take it at this particular time because you're covered under another health insurance plan. Once you decide to retire and leave your employment, then you're going to come in and file that application for Medicare Part B, and we're going to get you to complete some forms for us so that we can verify that you were always covered under that group health care plan. And as long as we verified that, then the next thing that would happen is that there would be no penalty because you were always covered. And as long as you come into Social Security within 8 months of retiring and do that application with us, then you should be good to go, and then that way we can verify that you were always covered and there will not be a penalty. But if for some reason you wait past that 8 months, say that 9th month, just keep in mind that you could potentially be penalized 10% on top of that premium. The next part is the Medicare Part D plan, or the prescription drug plan. The information I typically give most people about that is talk to your pharmacist so that you and that particular pharmacist can look at your list of medications, and that way you can find the best plan based upon the medications that you take. And the plans are going to vary in cost from provider to provider. On average, it's about $31 a month that you would pay, and that's in addition to if you taking Part B, that Medicare Premium. Finally, the other part is Medicare Part C, and basically Medicare Part C is the same as Part B. The only difference is that Medicare Part C is out there by private providers. It's still regulated by the Center for Medicare and Medicaid Services, but those companies that are offering this are private companies, and then the premium amount is going to vary from company to company depending on what company that you choose. What Social Security's role in terms of Medicare is number one, we'll take your Medicare application for you. Secondly, if you are receiving benefits with Social Security, then by law, Social Security has to take those premiums out of your benefit that you would receive from us. But if you decide you wanted to take Medicare Part B and you're still working, then Medicare will send you a quarterly bill and you'll just pay that quarterly statement with them. A good source of information for you if you have a lot of questions is to contact Georgia Cares for assistance. Their 800 number is listed here on the screen, that 866-522-4464, or you can check out their website at mygeorgiacares.org, because they do have a lot of counselors available that will take the time to talk with you and go over the different plans that are out there and kind of clear up some of the confusion about which plan is the better plan or the best plan for you. And just to reiterate, if you, like I said earlier, if you're receiving a cash benefit before age 65, if you start your benefits with Social Security at age 62, probably about 3 months before you turn age 65, you don't have to come in and apply for Part A and Part B. You don't have to apply for Medicare because you're already receiving that cash benefit. Social Security automatically enrolls you in Part A and Part B, and then the premiums will be deducted from your benefits. And that's if you start to take that benefit at age 62, somewhere between age 60 and your full retirement age. Again, if you're still working at age 65 and covered by that health insurance from that employer, then you would only apply for Medicare Part A as long as that employer tells you that you can opt out of Part B. If you're not receiving that cash benefit before 65, then again, you do a Medicare only application and then you pay those premiums on a quarterly basis. But the most important thing that you need to remember is that if you're working past age 65, is that once you stop working, you have 8 months to contact Social Security to enroll in Medicare Part B without that 10% penalty. That's the biggest part there for a lot of people.
So it's from the point that you stop working that the 8 months come in. You don't need to contact them 8 months before you stop.
No, because we can only take the application the earliest we can take your Medicare application is 3 months prior to you turning age 65, because we've had individuals to come in, say 6 or 9 months out, and unfortunately you've waited in line, or if you've called an office, you've kind of wasted a little bit of your time, because the earliest we can do it is 3 months prior to. Right here we have an example of the Medicare card. One of the good things I can say about the Center for Medicare and Medicaid Services is they have revamped this card, and the Social Security number is no longer a part of that card, so I'm just really excited about that. And they put a claim number on there, so if you already have a Medicare card, they are reissuing those, and it is going to take them a little bit of time to get those new cards out to everybody if you already have one, so just be patient with them. They are coming, but for new people coming onto the rolls, your claim number should not be your Social Security number, because they realized with identity theft that was a big issue, especially for senior citizens. And then finally, I just have the 1-800-Medicare number if you have questions for them. And also on the table out in the lobby, if you need a Medicare and You 2016 book, I have plenty out there. If you know somebody that needs one, please pick one up for them. It's a very easy read. And again, that's another good place to get information about Medicare, because it's going to let you know what services are covered and what are not covered by them. And does anybody have any questions in reference to Medicare? Yes, ma'am. Mm-hmm. No, Part D is optional for you, so you can take it at any point that you decide to take it.
So you're not penalized if you wait 2 years?
No, not like you're penalized with Part B, but because Part D is optional.
Okay.
Any other questions? If not, I just want to say thank you all for allowing me to come out and to provide this information for you. And I'm going to stick around, so if you have questions 101, or if you're a little shy, I'll answer your questions as best I can. And if not, I will direct you to the right person so we can make sure that we get your questions answered. Thank you.